There has been a carnage on Dalal Street, with the Sensex crashing more than 750 points and the rupee hitting a record low of 62 to the dollar in morning. Sensex plunged 769 points to close at 18,598, tracking a record low rupee, and on fears that an early rollback of US monetary stimulus would trigger a sell-off by foreign investors. Nifty traded below the key 5,550 level, dropping over 220 points. Metal, energy, realty and capital goods shares fell over 4%, dragging the benchmark indices lower.
A worried Prime Minister's office, or the PMO, has called a high-level meeting of Finance Ministry officials. The markets were spooked by the Reserve Bank's decision on Wednesday curbing foreign exchange outflows. The RBI has put restrictions on the amount of forex corporates and individuals can invest or send overseas. The direct investment by Indian companies has been cut 3/4, making it more difficult for them to invest abroad. Individuals can only send about $75,000 abroad a year. That was from the $200,000 permitted earlier. No investments in overseas properties allowed either, but all those measures proving to be counterproductive at this point.
The government's latest round of measures to prop the rupee up are failing to deliver. Continuing its rising streak, gold prices again crossed 30,000 rupees for 10 grams level in future trade today. Gold rose 3.56% as speculators had a field day amid a firming upward trend overseas.
On a collective basis, if you see, yes, I can say earlier we used to say that we could enter recession. Now we are in a phase of recession as a country, and I fear another thing, that not only recession, this recession, if not rectified, could make us enter a period of stagflation. Stagflation is where economy stagnates, the growth of economy stops and inflation keeps on going high. So things are really bad. Unless there is some serious immediate damage control from the government.
In fact, this was the third meeting in the last 2 years where we have reviewed, first of all, FDI in pharmaceutical sector, 100% is allowed. In greenfield and automatic route, a view was taken in October 2011 that in brownfield it will come through the FIPB route. Initially it was meant for a defined period of 6 months, but thereafter it has continued. There are conditions which have been put in with regard to investment, R&D and manufacture of medicines or injectables by the company even after the FDI has come and there have been acquisitions. I'm sure those conditions are being followed and they'll be monitored.
The immediate reason is the very wrong policies that the RBI and the Ministry of Finance has taken in order to defend the rupee. The measures, most recent measures announced, and including the earlier ones from mid-July, in my view are the most inappropriate measures in order to defend the rupee. The key part that I want to emphasize, that the value of a currency is most affected by economic growth, not by interest rates. And that is the fundamental misunderstanding, in my view, of the RBI.
But naturally, opposition parties have called it a financial distress signal and have described the larger economic picture as being one of deep, grave danger.
This has never happened in Indian history, and trying to check control prices, check inflation. But the fact remains that India ceases to be a part of the trillion-dollar economy. It seems there is a complete financial distress in the country. Government has completely failed to check and control the falling rate of dollars against rupees, and the way the rupee has become weak, it is very dangerous. It is going to create a situation where the country is going to enter into a financial distress, which is already at its peak.
It's very clear that there is a very serious current account deficit that is has built up in the country, and this was bound to happen because the way India has liberalized its imports, You are today having a huge amount of what is called non-essential imports. Luxury items, gold, silver, bullion. I mean, India is one of the largest importers of gold. Now, in this sort of a situation, your current account deficit is bound to rise.